Well, if you're one of those really disciplined outdoor runners, even through the cold of winter, you'll know this scene. You rush out the door into the chill of the pre-sunrise morning. You're still half lacing a running shoe, and you've once again over-snoozed the alarm. And a few Ks into the run, you realize that you've forgotten your bank card and your phone on the dresser. Now, even a year ago, this would have been a serious problem considering our need for a coffee reward after a run. But now it really isn't, because you can use your Apple Watch to both check your heart rate after your run and tap for that much needed caffeine boost with Apple Pay or Samsung Pay or Fitbit Pay or Garmin or SnapScan or Zapper, QR payments. These are words that really roll off the tongue of consumers with more ease than ever before. The adoption of mobile and contactless payments really has accelerated substantially in the past 18 months, thanks largely to the pandemic. And to talk more about this, it's a great pleasure to welcome Chris Zietsman, who's CEO of SnapScan, certainly one of the top apps next to a few others on my phone. Chris, great to have you on Business Talk.
Thanks, Michael, and thank you for reminding me that I haven't been sticking to my running program.
Don't worry, you're not the only one. Not through this cold snap. I don't have that kind of discipline. Now, the SnapScan app has recently launched a new version of its wallet feature. You've got an update that lets you send money to other people. Just talk us through this new offering.
Sure. So the wallet is something that's existed within SnapScan for some time, but it's never really been optimized. We kind of built it in 2018 very much as what we call an MVP, so minimal viable product, something that we thought super users might use, and it got some good traction. But there's always been some key inhibitors that have really been a stumbling block for us to scale the product and get all of our consumers to start using it. And that's just the fact that once you send money to a different individual, that money was never liquid. You had to go and spend it within the SnapScan merchant network. You couldn't send that store of value that you've received from a friend on to another friend. So one of the big enhancements we've made is the ability to make that money liquid. So it's kind of like a bank account. If you want it back, you can withdraw it back straight into your bank account. If you wanted to send that to a friend, you can send that to a friend. And so you don't necessarily have to charge your card every time you want to send your friends cash. You can now do that straight from the wallet. And that's been probably one of the things that have really helped us to spike the usage of the wallet. So people really trust putting money into the wallet or sending money to friends, because they know that once their friends receive this money, or once they receive it for that matter, if they wanted it back in hard currency, they can withdraw it back into their bank account and use it as they wish.
It sounds very similar to, say, for example, Capitec, Send Cash, Mobi Money, FNB's e-wallet. How is it different from those offerings?
Yeah, so it does sound similar. I think the biggest difference is that we're very much bank agnostic. So SnapScan's value proposition to consumers and merchants has always been, you don't have to use a specific bank card on SnapScan. You can load any bank card that you wish. We don't care who you bank with. We just want a digital relationship with you as a consumer who wants to pay. And as a business, we'll settle you to whatever bank account you've got. So you don't necessarily have to have a bank account with Standard Bank or with Capitec or with ABSA. And so we facilitate interbank transactions regardless of who consumers and merchants bank with. And so we've used the same strategy in terms of how we see cash send. So it doesn't matter whether you as Michael can bank with Capitec, and you can charge your Capitec card and you can send money to me and I can cash that out into a Standard bank account. And so it's totally bank agnostic. So we kind of follow the PayPal, Venmo type model there.
Right.
Whereas the bank options are very much closed loop. So you have to send from one bank account to another within the same banking network.
Still using their rails, to use the industry jargon. And really, that's the exciting part of QR codes and these new fintechs that are on top of those rails. They really traverse the entire ecosystem. And speaking of ecosystem, we've seen Apple Pay, we've seen Samsung Pay. They've got super apps that are now becoming more common. There's Telkom Pay in WhatsApp. There's just so many of them. The ecosystem is becoming very crowded. How does SnapScan actually fit into this ecosystem?
By boxing very cleverly. So the payment ecosystem is massive, and you have to, if you're going to operate within payments, especially in a country like South Africa, where we have I think one of the biggest number of fintechs vying for a very small market. You've got to find your niche and focus on it. And so thinking that you can win in every single use case is going to probably tank your company, because you simply cannot. And you have to find these use cases where your product can differentiate in a way that gives you a lead that others will, spend 2 to 3 years in order to just catch up. So differentiating on the experience is key. So when Apple and Samsung launched, Samsung's been around for 2 years, but I think Apple Pay launching was probably one of the biggest events in payments in SA for the year.
Yeah.
I was quite excited. As a CEO of SnapScan, I should probably be intimidated. But our exco and our strategy forum realized long ago that we're not going to be competing against Apple Pay when you pay at Woolworths or Pick n Pay or ShopRite on a POS terminal. We win in the e-commerce space, whereby we facilitate a very quick checkout for people on a mobile device. We win in small markets where people want access to card payments, but without the hassle of paying for expensive payment hardware. So we focus on those experiences that we can win. And we don't seek to necessarily compete head on with Apple, because you might just walk away with the bloody nose.
That's quite smart. But I must say, speaking of the experience, I was an early convert to the QR code payment mechanisms, because I just found it so much quicker. At a restaurant, for example, if it comes with a bill and a QR code, you can scan and almost instantly be gone. You don't have to wait for your waiter to bring a handheld POS and then wait for the bank upload and download. And it really is fantastic. There are the odd occasion where it doesn't happen, but that's more, I think, network infrastructure inside the merchant that needs to be checked out. Now, when we look at that behavior, I say I'm an early adopter. Are we seeing that being accelerated now thanks to COVID? Are we seeing more and more people now having an array of these different options on their devices to have that ease of experience?
Certainly. And I think, as tragic as COVID has been, it has been a very key accelerant for mobile payments to be adopted. My mother now has SnapScan on her phone. It's not necessarily something that she used before, but these options have been adopted by merchants and by consumers. And when this happens, you get this kind of flywheel effect, whereby consumers ask to pay with a specific payment method, and they educate merchants in that process. Or a merchant has an alternative payment method available to consumers, and it's evident by branding or in-store collateral. And so consumers tend to, catch on very quickly and adopt these products. So it certainly has been a process of education to the public, and our numbers show, that similar type of adoption trend. Where in the past, adoption of mobile payments was really because people had this need for convenience and trust. So people wanted the convenient payment experience. You wanted to be able to, just ask you a bill, scan and pay and leave. That was convenience. Now it's safety and trust. And so people want to not necessarily pay or touch a POS terminal, or people are very conscious around safety during COVID. And so this narrative towards touchless payments is something that's very topical at the moment.
Obviously, a big driver, that contactless payments. And according to Tsipi Alexander, who's head of consumer issuing at Absa Card, and it's interesting to see how the banks are interfacing in this space. I think initially it was seen as quite a competitive environment, and I think that's now seen to be breaking down a little bit. But the bank saw a surge of around 200% in contactless payments last year, and e-commerce doubling. So that really feeds into that growth narrative that you've seen. What kind of growth has SnapScan seen over the last 18 months?
So we don't generally publish our numbers publicly, but what I can say is that we saw similar type of trends. And everyone normally focuses on the fantastic take up in e-commerce and the growth that we've seen there. And I must say it's very positive to see our economy moving over to digital. And so we've seen significant turnover, and what we classify as turnover is just random amount processed from an e-commerce perspective. But what we've also seen that worries me is a sharp decline in brick and mortar stores. And so where we've found a lot of growth within e-commerce, and there's big tickets, and so you're generating payments for anything from 1,000 to 50,000 rand a pop. You're seeing the smaller quick serve restaurants have way less turnover and volumes than they had pre-COVID. And so, we've seen a decline in that merchant base, but a big uptake in e-commerce.
Yeah, that would align with the Stats SA statistics. Just under 1,000 businesses liquidated year to date. And I think many of those small and micro enterprises in the kind of restaurant, hospitality, tourism space, it really is a sector that urgently requires some more support from government. Now, you mentioned earlier, you alluded to it at least, that you want to move beyond your scan to pay value proposition. And it's really about probably evolving into something of a more complete payments ecosystem player. Can you just elaborate on how you see that evolving?
Yeah, that's a loaded question. But I think, I've always seen the value that sits within payments. But one has to realize that there's very little money to be made within just processing a payment. It's a highly commoditized industry. There are very strict regulations that govern what you can charge, what you have to pay away to card issuers. And so it makes the rules of the game very standardized. So it's very difficult to price yourself differently to competitors. And so what we've seen over the last few years is a very steady decline in terms of what you can charge to process a payment between a consumer and a merchant. Now, SnapScan and Zapper and some other mobile payments providers have been able to justify a higher rate for a long period of time because we bring a consumer to you, right? So we process a transaction between a known consumer and a known merchant, whereas a bank that only provides you with a card machine can only process a payment. They don't know who that consumer is, and they don't necessarily trust the consumer. So mobile payments generally is a way better from a security perspective, because a card is never present, it's tokenized, and there's incredible security protocol that facilitate those payments. So our objective is really to broaden our capabilities over the next couple of years, and so we're looking at introducing a merchant application, which is currently on the App Store in the beta phase. That allows our merchants to send payment links to their consumers, and they can do that through WhatsApp or email, whatever messaging channel they prefer. And those links can be clicked and paid by SnapScan consumers, or they can choose to pay by card and then manually enter your card details if you don't have SnapScan or you don't necessarily want to get the SnapScan consumer application. And so we're broadening the channels and the rails, as you so rightfully said. We're opening ourselves up to these jargons and allowing more payment methods to flow through our platform, and in so doing connect consumers and merchants in the way that they prefer to pay, not necessarily just on a basis of a QR.
Well, I can see the value in that for a merchant, because for a merchant, you're now getting data and insights into your customer that previously just wasn't mined and remained latent. I think that's absolutely valuable in the bottom line here. And if you go back to what Jeff Bezos says about business, it's about delighting your consumer, delighting your customer. And if you've got more data on them, you can give them more targeted rewards offers, for example. And I know you're working with quite a few partners to incentivize cashless take-up. What does your research actually tell you about reward programs? Do they work? Is there a perfect formula to get people to transact via their mobile?
So I don't know if you saw the recent launch of Capitec's cashback reward. for the life of me, I just can't remember it. But I think that's the approach you want to take. You don't want to generate tiers, and I think consumers in South Africa are very tired of having to play a game in order to get something. It was novel when it launched, and so up till about 2012, I think gaming the system and earning your e-bucks or whatever reward or loyalty program you belong to was fun. But I think consumers now want something that's predictable. And so we've built a number of capabilities that we'll be rolling out within the next year or so that allow us to give merchants the ability to run their own cashback rewards system. So if the merchant wants to give 50% of a transaction back to their consumer, they can do so, and that money will come and land in a sub wallet. So not in your transactional wallet, so you can't send that money on to your friends, but you can only redeem it again with that merchant. And so we think, or I think at least, that the way in which you can incentivize consumers is always the best experience and convenience. And I think that trumps any reward program. Just give a consumer and a merchant a good experience whereby they know during, at what stage of the payment process they are. And then give the merchant the ability to tailor a give back campaign according to the margins that their business allows for. And so we do that, and we've done that with Stellenbosch. We'll be doing that with Franschhoek, where the communities, for example, have donated a couple of million rand for each of these campaigns in order to inject money into their local economy. So this capability can be used either by a standalone merchant or within an ecosystem in a community. Wow. Whereby they just want to drive money into their local economic arteries, if you want to say.
Yeah, that's a powerful example of what you can do to leverage this community that you've built around these payment applications. And when it comes to ease of use, I can't think of anything worse than standing there with my 7-year-old and my 4-year-old wanting to leave a restaurant and then haggling over a system that's gone down because the bank is offline or anything like that. So if you hit that out the park, you've got my patronage, that's for sure. And I couldn't agree with you more. Gamifying these systems has just become far too complex. That's certainly not what I'm after at the moment. You've got a relationship with Standard Bank. Can you just tell us some more about exactly what that relationship is with Standard Bank?
Sure. So we started out in 2013 and really launched SnapScan as a pilot towards the start of 2014, and that was in partnership with Standard Bank. So Standard Bank was at the time the sponsoring bank for our product, and this was very much new territory for us, and for South Africa for that matter. So processing a card payment in a face-to-face environment where the card is not present was something that really required bank sponsorship. If you had gone and done this without a bank really standing behind you and wanting to empower the company to win, speaking to the regulator, explaining to the regulator that it is safe, that the bank has done its due diligence, that was really important for us. So initially, we really just launched in partnership with Standard Bank. Toward the end of 2016, Standard Bank then took a majority stake in our business. So they bought out a number of the founding shareholders, and today they still act as the controlling shareholder of the company.
And if you look at that relationship, are the management team still sufficiently incentivized and aligned with the business? I know it's a very private equity type speak, but it's very important to have that alignment when there has been a change in controlling shareholder.
Yeah, I think it's something that is a continuous conversation, and I think that is company-wide. You have to get the right blend of short-term incentives and long-term incentives. And during a time of rapid growth, I think anything that you had in place previously needs some rewriting and revisiting. And so we're in that process at the moment. But Standard Bank has been a good partner for our business. We've had really good leadership and guidance from an equity perspective. So our board is consisted of some very senior individuals within the Standard Bank organization. And from a distribution perspective, if you're a payments company, it makes sense to work with a bank because the distribution is immense, and you can save a lot in terms of your total cost of acquisition for customers, because banks, generally come with a big number of customers.
They certainly do. And, what most of those customers experience almost on a monthly basis in South Africa, we know that 2021 is going to be the worst year on record for load shedding, is power outages. And it can decimate a business, especially a business trying to get out of the pandemic-induced economic slump that we're in. But you've got a bit of a solution for times of load shedding. I mean, what sort of growth are you seeing in this space?
Yeah, certainly. So electricity is one of those things that I think is a double-edged sword for me. So we sell electricity as a value-added service from the application. So depending on what municipality you're in, you can buy prepaid electricity within the app, and it certainly is a very sticky feature that we have. So when there's electricity, we do have good sales generated through VAS purchases. But when there's load shedding, at least we have the ability to process payments in a card setting, even if a merchant has no access to power. So this is certainly something that we do see some spikes on during load shedding periods. We see merchants bringing out their QR codes, and they might have some extra ones and putting them, next to each till. And I've seen this at a Spar in Cape Town, where multi-lane retail is something where you generally don't see QR code payments, just because the recon process for the franchisee is so difficult. But during times of load shedding, when POS terminals go down and UPSs fail, QR payments go on, because all you need is a piece of paper with a QR code and a consumer who has a charged phone, and you can still process payments.
Yeah, that is a huge advantage, and one that might see a quicker uptake in multi-lane retail, as you say. Now, it also speaks to the challenges that businesses have had to operate within. And I think adaptability, flexibility in the face of the pandemic has been absolutely critical. From your vantage point and the data that you sit with, what challenges and opportunities on the other side of that coin have you encountered over this difficult period?
I think plenty, and both on a positive and a negative side. I think what astounds me is looking at our numbers and just seeing how well some merchants that are willing to just wheel and deal can do during these times. I think there certainly is merit in the statement that the consumer is under significant pressure in South Africa at the moment, but that doesn't mean that people don't have access to lending and access to money in that sense. And South Africans are consumers. We buy, by default, we want to spend and we want experiences. And during lockdown periods, people can't necessarily go out and have the experience that they would have had pre-COVID. And I think that spending power still exists, and we certainly do see that spending power landing up with some of our merchants that are just savvy in terms of how they want to run a concert online, for example, and they want to pay with, consumers pay on Quicket for an online concert for music, just as an example. So we certainly have seen that, but the ability to do that is not necessarily available to all of our merchants. And so not all of them have the tech savvy nature. Not all of them have access to the same type of internet services or hardware than the other. So one merchant's advantage is the other's disadvantage in that case.
Yeah, absolutely. And well, the one thing the pandemic has shown is the kind of broadband inequality that pre-exists in South Africa as well. And chatting to the head of Google for this region the other day, that is one of their fundamentals, is to try and support the various cable operators and the last mile, and just ensure we can all get connected to the internet, because the economic multipliers are just astounding. What can we expect in terms of multipliers from SnapScan in the medium term? What do you have planned for in the pipeline?
We've got some interesting things. But I think we're running a few projects that are still under wraps, that I probably can't speak about at this stage. But things that we are looking at is evolving the SnapScan wallet even more. We see the benefit of transactability between consumers and blurring the line of what a consumer and a merchant is. And so, in future, we may very well take the SnapScan wallet as you see it today for consumers and open up that to businesses and allow them to transact from the SnapScan wallets. And we certainly will look at the kind of vertical integrations for the wallet that we have access to by virtue of having access to the bank. So, providing you a debit card that's linked to the store of value in your wallet is certainly one thing that we'll do. And just making the process of payment even slicker and quicker, I think from a consumer perspective is very important. And then we've got a bunch of merchants who we have to serve even better, and we'll be evolving our merchant application, building a few more features in there as they become available. But yeah, payments is a very interesting space at the moment. And there are 1,000 things that you can do, but you have to pick your top 100 and just start from there.
Absolutely. Focus. You're not going to get out there and run your first 5K in under 30 without really focusing on how you build up. But it does sound like you've got the running shoes on. Chris Zietsman, CEO of SnapScan, thanks so much for sharing your experience and your journey so far here on Business Talk and Business Tech. Take care.
Thanks so much. Ciao.